This is Colin Cattell with Palisade Radio. On the line with us today is David Miller, President and CEO of Delcan Resources. David is an expert on uranium. He's the former CEO of Strathmore Minerals, which was sold to Energy Fuels in 2013, and he was responsible for spinning off Strathmore's Athabasca properties into Fission Energy. For any of our listeners unfamiliar with the success of Fission Energy, I urge you to do some research. There has been no uranium exploration company in the world with as many repeat successes on major discoveries in the past few years. David, great to have you on the show.
Hey, Colin. Great. Thanks for having me.
Let's jump right in. I know I may have just given our listeners a bit of a spoiler, but talk to us about how you got into the uranium space originally and your history with both Strathmore and Fission.
Well, Colin, I got into uranium back in the late 1970s when uranium for the commercial nuclear power plant sector really took off. I was hired by a company known back then as Utah International. It was one of the big uranium companies in the world, big mining company. They had recently just been merged into General Electric. It was the largest corporate merger in history at that time. The spin-out company was called Pathfinder Mines, and that's the company I joined back in the late 70s. In 1982, General Electric sold that company to the French nuclear giant Areva. It was called Kojima back then, but it's the Areva group that's present now. And I continued working with that group for the next 15 to 20 years, a total of 20 years with the Utah GE Areva connection. And then that's when Strathmore came along back. We really started up in early 2000s. Uranium had been in the doldrums for decades because of the overbuild in uranium mining back in the 1970s because of the big boom in nuclear power build. So in early 2000, we started Strathmore up, and my focus in Strathmore was two-prong: get big in the U.S. on the known deposits that had been mined historically, get them in production, get cash flow, and then the second prong was to get big in the Athabasca in Canada, because the Athabasca by far is the premier uranium deposit area in the world. So we wanted to get big there. We wanted to finance continuing expansion of the Athabasca with our profits from our operating uranium mines in the U.S. Of course, getting permits in the U.S. I didn't know would be a struggle, but in the long run, it all works out.
Just last week, the spot price dropped another 50 cents, bringing it to $32.50. Yet money's still being raised for uranium, and especially in the Athabasca Basin. Most of the juniors are well off their 52-week lows as well. And what is the current environment for uranium telling you right now?
The short-term pricing up or down is really has no meaning at this point. Last year, those of your listeners who follow the uranium sector know that the HEU deal, the highly enriched uranium, where the former nuclear weapons from the former Soviet Union were downblended into power fuel for nuclear reactors, primarily in the U.S. Half our nuclear reactors in the U.S. were powered by former nuclear weapons pointed at us. That deal ended in 2013. If Fukushima hadn't happened back in 2011, we would probably be close to $100 a pound again. But Fukushima did happen, and that's suppressed the market quite a bit. Some of the Japanese utilities have been selling into the market with their nuclear fuel. But the bottom line there is that the industry in Japan is pressuring their government to get their nuclear power plants back on, and that's going to start happening by the end of the year. And I think that's going to be the turning point in seeing these low spot prices. To be honest, most new deposits around the world that have come online the last 10 years can't produce uranium at these prices. Their average cost of production is probably close to double what the current spot price is. So we're going to see the price come back up once the nuclear fleet in Japan starts coming back on.
As you mentioned, back in 2004, you used the low uranium price to stake up a whole bunch of highly prospective land. And with a rebound in uranium prices, you were able to create tons of shareholder value over the following decade. You're back at it now with a new company, Delcan Resources. Why have you decided to focus just on the Athabasca Basin this time around?
Well, Colin, it's pretty much going to be the same strategy as before. The strategy before was get big in the Athabasca Basin. We were over with Strathmore. We held over 3 million acres at one time. Of course, all that was spun into Fission, and the resulting 2 discoveries that came off that land or our nearby land with that. So, it was exactly the right strategy at the time. We're kind of deja vu all over again, except this time around, Declan won't be picking up any major uranium deposits in the U.S. We may pick up some smaller stuff as they become available, or if they're strategically interesting from a asset point of view, but we won't be trying to permit mines in the U.S. like we were in Strathmore. So it's different this time around with Declan. The focus will be the Athabasca Basin. And the real question is why the Athabasca Basin? It's just that the grades are so phenomenal. It's 1 or 2 orders of magnitude higher grades of uranium in the Athabasca when compared to anywhere else in the world. Namibia, Niger, the U.S., Kazakhstan, you're talking grades of 0.05 to 0.1 or 0.2%. Athabasca, the grades that they're hitting are in the 10%, 15%, 20% uranium range, 2 orders of magnitude greater. So, frankly, if you have a Cigar Lake or a McArthur River, if you're in production, you make a lot of money even at $32.50 a pound. They're going to make even more money when the uranium price starts recovering where it should be, which is in the upper 60s, in the 60 to probably $80 or $90 a pound range is where I expect it to be in a couple of years.
The team you've assembled for Declan is top-notch with several past successes. Give our listeners the overall strategy for Declan moving forward.
Well, with Declan and the team we have here, let me talk about the team a little bit first. I've been in the uranium sector 30 years with Utah International and Areva, basically 2 of the largest uranium companies historically, and they know what they're doing. Hikmet Akin is another geologist that's on our team, and he was the president of a company called Uranium, which was the German consortium that acquired and mined uranium in the Athabasca Basin. They discovered the Key Lake deposit. I believe Hikmet was part of that team. A lot of the properties we're looking at now, Uranium had a piece of at some point in the past. So, between the 2 of us, we kind of cover almost every deposit in the world at some point with some piece of knowledge that we have in there. And of course, we have contact with pretty much every person with some background in uranium in the world. But the other successes in the past, of course, Utah International, the GE connection, the Areva connection, the Uranium connection. With Strathmore, we went from a 10 cent, 20 cent a share stock up to $5.50. We did 3 major joint ventures with Korean and Japanese partners, resulting in 2 discoveries. The properties we acquired in the Athabasca in the early days resulted in 2 discoveries, the Waterbury Lake project with KEPCO, and of course later when Fission was spun out, the PLS property, I believe, was acquired while I was still president of Fission. So, the background's there. It's a pretty straight recipe. You have to spend dollars in the ground, drill holes to make discoveries. And you could say the average cost of discovery might be $3 or $4 or $5 or even $10 a pound. The better teams are going to be able to do it at the lower number. With the team we have assembled, we hope to do it for $1 or $2 per pound or even less in our discovery cost per pound of uranium discovered. My guess we'll be half the cost of a Cameco or an Areva in our discovery cost per pound in the Athabasca Basin.
David, with that being said, any last-minute thoughts to share with our listeners?
No, I think look at what Strathmore did through the years. At this point of the game, we were a 10 or 20 cent stock. We went up to $5.50 a share. That's when we spun out Fission. Fission continued with their success. With Fission, we did 1 joint venture with a Korean entity. I was still president of the company when we completed that deal with Fission. We did 2 more joint ventures down here in the U.S. with Strathmore, with Asian partners. One out of Japan, another one out of Korea. So, we know how to bring Asian money into our joint ventures to help us get the number of drill holes that are required to make these discoveries in these great deposits in the Athabasca Basin.
Well, thanks so much for joining us today, David. Delcan Resources is listed on the Venture Exchange under the symbol LAN. I understand some big news could be on the way, and we very much so look forward to getting you back on the program soon.
Colin, thank you very much.